We all have this idea, right? This dream of financial freedom.
Hmm.
The day when your money starts working for you, maybe taking some pressure off the daily grind.
Yeah, freeing you up.
Exactly. And today we're doing a deep dive into a company that's often held up as, well, kind of a blueprint for that. Realty Income. The REIT, listed as O on the NYSE.
That's right. A real giant in the space.
And they've got this title, which I find fascinating. They actually trademarked it, the Monthly Dividend Company.
They did. It's quite a statement.
It is. It's catchy, for sure. But the big question for us and for you listening, is this just, clever marketing, or is there real substance there? Does it actually pave a path towards dividend-funded freedom for retirement?
Well, that's what we want to unpack. And what's interesting about Realty Income, I think, is how simple the core idea is.
Okay.
At its heart, it's a REIT, a real estate investment trust. They own a huge portfolio now, over 13,000 commercial properties.
13,000? Wow.
Yeah, mostly in the U.S., but they've expanded into Europe too. And the business model, it's pretty straightforward. They buy properties and they lease them out long term.
Right.
And crucially, they use what are called triple net leases.
Triple net. Okay, what does that mean practically?
It basically means the tenant, the company renting the space, pays for most of the variable costs. Things like property insurance, the real estate taxes, and even most of the building maintenance.
So Realty Income just collects the rent check, more or less.
Pretty much. It makes the income stream much more predictable for them. They're essentially just managing the property asset and the lease itself.
Got it. And who are these tenants? You mentioned commercial properties.
Ah, yes. And this is really key to their whole strategy, I think.
Yeah.
They often talk about leasing to big, boring, recession-proof names.
Boring is good in this context, maybe?
Boring is fantastic here.
Yeah.
Think about Walgreens, Dollar General, FedEx, 7-Eleven, places you see everywhere.
Okay, household names. Familiar.
Exactly. And even government agencies rent from them. The genius, arguably, is that they focus on businesses providing essential goods and services.
Right, things people need regardless of whether the economy's up or down.
Precisely. People still need prescriptions from Walgreens. They still buy essentials at Dollar General. Packages still get shipped via FedEx. It's less about the brand glamour and more about that inelastic demand. It makes their rental income incredibly resilient.
That makes sense. It adds a layer of stability beyond just the lease structure.
It really does.
Okay, so it's clear why people see it as more than just another REIT. It sounds like many view it as sort of the standard for income investors.
That's often the reputation, yeah.
So our mission today is really to dig into why this specific company gets that kind of pedestal status. What does it actually deliver if you're looking for that reliable income? But, no investment is perfect. In a world of market swings, roller coaster rides, does a model like this truly make them immune? Like, what about interest rates? Rising rates can hit real estate, can't they?
That's a really important question. And no, they're not completely immune. Nothing is. Rising interest rates can affect things.
How so?
Well, it can increase their cost of borrowing if they want to buy more properties, and sometimes it can put pressure on property valuations overall.
But the triple net lease helps.
It provides a significant buffer, yes. Because the tenant is handling those operating costs that can fluctuate, Realty Income's core rental income is generally more stable and predictable than, say, an apartment REIT or an office REIT might be.
Okay.
Plus, they've historically maintained a very strong balance sheet, good credit ratings. That gives them flexibility, better access to capital, even when rates rise.
So less exposed than some others might be.
Significantly less exposed on the operational side, yes. Their model is built for predictability, maybe not explosive growth, but steady, reliable income. That's the trade-off, and for many income investors, it's exactly what they want.
Okay, that clarifies things. So let's circle back then. When we talk about Realty Income's core traits, it really sounds like reliable, predictable, durable. Exactly. It's not the exciting high-growth tech stock, definitely not a moonshot.
No fireworks here.
Right. It's more like a monument to patient, steady income investing, like a quiet workhorse in your portfolio.
That's a good way to put it.
Yeah.
And that's why when you look at the dividend landscape, so many people consider it a core holding.
Right.
You compare it to other dividend stocks, and Realty Income often hits this kind of sweet spot.
What defines that sweet spot?
Well, as of now, July 2025, you're looking at a pretty attractive yield, around 5.5%. But the key differentiator is the monthly payment.
Ah, the Monthly Dividend Company promise.
Exactly. And it's not just recent history. They have an incredible track record, something like over 120 dividend increases since they went public in 1994.
Wow. Increases, not just payments.
Consistent increases. So you get yield, you get monthly frequency, and you get this long history of performance. It tends to be less dramatic than many other investments. Less drama is often good for income seekers.
Definitely sounds less stressful.
And zooming out to how people actually use it in retirement planning.
Yeah, how does it fit in?
It's very commonly seen as that core income holding. Think of it like an anchor stock.
An anchor. Okay.
Yeah, or ballast against market volatility. Because its income is tied to those essential businesses, it often holds up better when other parts of the market are shaky.
So people allocate a specific chunk to it?
It's pretty common, yeah. You might see retirees putting, say, 5%, maybe up to 15% of their total portfolio into Realty Income or, similar high-quality REITs, primarily for that dependable income stream.
And you mentioned the monthly payments again. There's something more than just the math there, isn't there? Like a psychological aspect.
Oh, absolutely. For you, the listener, think about it. Getting that deposit into your account every single month, it feels like a paycheck.
Right, like you're used to from working life.
Exactly. It makes budgeting feel more natural. Yep. Cash flow management is just simpler. It provides this sense of financial rhythm and calm that getting a check only every 3 months doesn't quite replicate.
That makes a lot of sense, that regular, predictable flow.
It really resonates with people planning for or living in retirement.
Okay, so let's frame a final thought then. If your retirement plan really hangs on generating steady cash flow from dividends.
Not chasing market highs or speculating.
Right. And the real goal is, frankly, to sleep better at night, knowing your investments are delivering that consistent paycheck month after month.
Without having to sell off your core holdings, your principal.
Exactly. If that's the goal, what could that level of consistent, reliable monthly income security truly unlock for your own retirement dreams?